Welcome to the On Purpose Investor. My name is Eric, and this show is where intentionality meets investing in yourself and your finances.
And I'm Josh, and together we'll explore the strategies, insights, and stories combined with inspiration and motivation to help you live with purpose and make an impact.
Now, whether you're a seasoned investor or just getting started, join us each week as we dive deep into the world of intentional investing. Welcome to the On Purpose Investor Podcast. Today, we're interviewing Jay Conner, the Private Money Authority. Jay Conner began investing in real estate in 2003. At the start of his career, he relied on his local banker and was able to put together a few deals. However, that also meant coming up with large down payments, paying origination fees, and signing personal guarantees on every deal. After years of feeling owned by the bank and being stressed out, he learned how to buy properties using creative financing, including subject to and using lease options. Let's hear more about it here on the On Purpose Investor Podcast. Welcome to the show, Jay Conner.
Oh, my lands, Eric, thank you so much for inviting me to come along and talk about my favorite and most passionate subject in real estate. And of course, that is private money, because private money's made more of a difference in mine and Carol Joy's real estate investing business than anything else that we've implemented or any strategy.
Amen to that. And I loved reading through your bio, just talking about how you got so tired of working with the banks. And I tell you what, we worked with the banks on a handful of our first deals, and then eventually they start saying no. And when they start saying no, was that a hard stop in the road? I think not. We didn't stop. We shifted how we got money. And that's why I'm just so excited for our listeners to hear how you have solved your problems of working with the bank and how they might as well.
Absolutely. I remember it like it was yesterday. So we started full time here in Eastern North Carolina in 2003. 2003 is when we went full time investing in single family houses. Now, we've done other types of projects as well. We've done shopping center from the ground up. We've done a condominium development from the ground up and took a bloodbath on that back in 2007. But our focus has been single family houses since 2003. And Eric, from 2003 until January 2009, I relied on the local bank. That's all I knew to do. All I knew to do was go to the local bank, get on my hands and knees, put my hand underneath my chin, raise my skirt up so they could see my personal assets and financial statements, and apply for loans. I had a line of credit, and I remember it like it was yesterday. I was sitting here at my desk, and I know it's hard to believe, but we actually still have handsets and cords attached to landlines here in North Carolina. But I picked up this receiver and I called a banker, and his name was Steve. I called up Steve, and Steve had been funding my deals for 6 years. We had a fantastic relationship, and we'd done tons and tons of single family houses that I'd invested in. And I learned on that telephone conversation that I'd lost my line of credit. I had 2 houses under contract that I had over $100,000 in profit on those 2 houses that I was looking for Steve to fund. And he says, "Jay, I'm sorry, but your line of credit is closed." And I said, "What do you mean, Steve? My line of credit is closed? Well, what are you talking about?" He says, "Jay, don't you know there's a global financial crisis going on?" I said, "No, but now you just gave me a global financial crisis, because I don't have a way to fund these 2 deals." So I hung up the phone. And Eric, I'm going to share a very powerful question right now that will fix any problem that your audience listeners have. I don't care if it's financial, health, personal, career, it don't matter. Relationships, whatever your problem is, here's the question I asked myself right after that phone call with Steve. I said, "Jay, who do you know that can help you fix your problem?" By the way, Eric, these people going around saying every problem's an opportunity, I want to throw up. I didn't have no opportunity. I had a problem, right? So I immediately thought of my buddy, Jeff Blankenship, who lived in Greensboro, North Carolina at the time. And he was a real estate investor. I called him up. I told him what happened. And Jeff said, "Jay, welcome to the club." I said, "What club?" He said, "The club of the bank shutting down your credit." He says, "They shut me down last week." I said, "Jeff, how are you going to fund your real estate deals?" He said, "Have you ever heard of private money?" I said, "No." He said, "Have you ever heard of self-directed IRAs and how individuals can take retirement funds and move them over to a self-directed IRA and earn tax-free or tax-deferred returns by being a private lender with you. I said, no, Jeff, I never heard of any of all that stuff. So I learned about it. And without asking anybody for money, Eric, I've yet to ask anybody for money. I've yet to pitch a deal since that time. And so I studied it, and I was able to raise $2,150,000 in less than 90 days. How in the world did I do it? Here's the secret sauce. I put on what I call my private money teacher hat. That's what it says, private money teacher. And so I led with a servant's heart. I just started teaching people that I had a connection with at the time, how they can earn high rates of return safely and securely as a private lender, as an individual. And what's interesting, we've got 47 individuals right now funding our deals, private lenders. By the way, you don't need 47 if you're listening. One or two will get you started. And of those 47 private lenders, not one of them had ever heard of private money or private lending until I put on my teacher hat and I taught them about it. And they'd never heard of self-directed IRAs. Over half of our private lenders are using the retirement funds to invest in our deals. So that's how I got into this world. I didn't wake up one morning looking for private money. I had a decision to make. I was forced into it. I either was going to quit, be out of business, go to the house with my tail between my legs, or I was going to look for a better and quicker way to fund my deals by asking that question: who do I know that can help me with my problem? And quite frankly, it did become the biggest blessing in disguise that we've had. We tripled our business in the next 12 months during a time where all these foreclosures were going on and lenders were not loaning money. And so with private money, we were able to pick and choose, tripled our business. Private money is the deal that's made the biggest impact. And in today's market, never before has private money been more important in today's market as well.
Amen to that. Jay, thank you for sharing that bountiful wisdom, because that's just something you don't hear a lot of, is how to raise that private money. I mean, I'm sure there are different places to learn how to raise private money, but how you went about it is a little different. And I think that's what makes it very unique and special. You didn't go into it going to people and saying, hey, I need you to give me money. You went to them offering them an opportunity. And if you go into it with that abundant mindset of they can loan me the money or not, it doesn't matter. I want to help them with their returns, because
Absolutely.
This is
That's
something
what it's
new.
all about.
Yeah.
I tell real estate investors all the time, they'll ask me, either seasoned investors or brand new. They'll say, where do I start? How do I start raising private money? I can tell you where you start. It's very hard to own real estate until you own the real estate between your ears.
Yeah.
And what I mean by that is getting your mindset right. And this applies to private money. It applies to talking to FSBOs and sellers. It applies to pretty much all relationships. And that is, I'm not begging, selling, chasing, or persuading anybody. I'm not trying to talk them into anything. Desperation has got a smell to it.
Uh-huh.
And here's what I mean by that. I hear this all the time. Real estate investors that have never raised money, or if they have raised money, they think they got to pitch a deal. They think they got to put a credibility kit together. Listen, you are your credibility. So let me share some secret sauce right here as to how this thing works. I said, get your head. So as we've just said, Eric, you want to lead with serving, showing people how they can earn high rates of return safely and securely. If in your initial conversations with someone about being a private lender, if you bring up a deal that you've got under contract, that you're looking for funding, you already sound desperate without even trying to sound desperate. They're already smelling it, right? So here's the secret sauce. Separate the conversation with a new potential private lender. Separate the conversation between the program as to how they can earn high rates of return safely and securely as a private lender, the interest rates you're paying, how they can get their money back in case of an emergency, the length of the note, the frequency of payments. Copy my program. It seems to work pretty well. But you teach the program with no deal involved, all right? And then without me even asking, are they going to use retirement funds? Are they got liquid capital? They got both. So they tell me how much they got to work with. And I tell them, I said, I'll put your money to work for you just as soon as possible. And particularly if they've got retirement funds that they're not happy with the returns, the volatility of the stock market is all over the place. And I introduce them to my representative at the self-directed IRA company that I recommend, where I have all my private lenders that are using retirement funds. They've opened an account at this particular self-directed IRA company. When they've moved their money over to a self-directed IRA company, they're not making any money until you put their money to work for them because they moved it over at your recommendation. So they are expecting your phone call. So I'm going to share right now the exact script. What do you say to your private lender when you've got a deal for them to fund? Now, this is assuming they already know the program, they love the program, they want to get involved. They're waiting for what I call the good news phone call. What in the world is the good news phone call? Here it is. Eric, let's say you're one of my private lenders. Let's say you've told me you got $150,000 just in liquid capital that you want to get your feet wet. Here's the exact script. I call up Eric, my new private lender. We chat for a second. I say, hey, Eric, how's it going? Great. And here's a script. Eric, I got great news for you. I can now put your money to work. I've got a house in Newport under contract with an after repaired value of $200,000. The funding required is $150,000. Closing is next week.
Hey, you're good.
Woo, what? Well, it went down the wrong hole.
There you go.
Anyway, closing's next week. You need to wire your funds next week. I tell you, I'm going to have my real estate attorney email you the wiring instructions. And notice that's the end of the conversation. You're waiting for the phone call, particularly if you've moved your money over to a self-directed IRA company. So notice I didn't ask, do you want to fund the deal? Of course you do. You're waiting for the phone call. So again, the secret, teach the program, then give them a call with the good news phone call. And that's it.
Yeah. Now that sounds great to me. You're teaching them the opportunity that is there, not for any personal gain, but to help them develop this ability to grow their asset, which is their cash, and they're trying to grow that. And I'm sure you're not out there pitching rates and all this stuff. The sell on the rates is that CDs are probably between 4 and 6%. Stock market can be upwards of 12, 15%, but can be low as negative 30%. So you're saying this is a secure investment because it's backed by real property, real asset. And if for some reason something terrible happens to it, there's an exit strategy that I'm sure you educate them on of, well, here's why it's safe. Here's how I protect your investment. And here's how this is a safe and even more safe than the stock market or CDs. And my question to you right now is, well, I have several questions, but my first question, what intermediary are you recommending for these self-directed IRAs? I know there's a lot of them out there, but which company are you recommending?
Yeah, so I have over all these years, as I said, we started in 2003, but we started working with self-directed IRA companies and recommending companies to our private lenders in February 2009. So we've been doing this for many years. My private lenders have worked with some self-directed IRA companies that ended up having terrible service. And now every one of our private lenders that are using their retirement funds, all of them, 100% of them, have their accounts at questtrust.com out of Houston, Texas. I get my deals funded, Eric, in 3 days.
Yeah.
3 days from the time we should have investment. 3 days, we get our deals funded. Their customer service is fantastic. All of our private lenders absolutely love working with them. I highly recommend.
Amen to that. I was recently at Jim Ingersoll's Dealmaker up in Richmond, Virginia, where Quest Trust was there talking about their programs, and their founder and CEO was there, and he's an excellent, outstanding man that is he's a lawyer by trade,
Yeah,
and
you're talking about Quincy.
yeah, Quincy Long is just incredible.
Yeah, I'm
He is
friends with
highly
Quincy.
intelligent.
Yeah, I'm friends with Quincy, his brother Nathan Long. They
Mhm.
together founded it. But yeah, they're phenomenal to work with. But my private lenders, in fact, they started chasing me probably, I don't know, 8 or 9 years ago, 7 or 8 years ago. And what's interesting, they don't charge the annual management fee, which a lot of self-directed IRA companies do. They charge based on the transaction,
Mhm.
right? So they don't
Yep.
want to charge you money unless you're making money.
Right. And a lot of the people that I borrow private money from are in Quest as well, and they're just super easy to work with. I'll tell my lenders, "Hey, I've got this deal," and they have no problem making it happen in 3 to 7 days. It's
Absolutely.
just
It's
super
amazing.
easy to work with them. Yeah, so
Yeah.
another question of mine is when you're having these conversations with these, we'll call them civilians, people that are outside of the real estate game, but they have retirement money to work with, and I'm sure a lot of them have a lot of questions on how exactly is it safe? Like we know as real estate investors that we trust this way more than we trust any investment out there. So, what are you saying to these civilians, these individuals with money? And do you talk about rates? Do you talk about their returns?
Absolutely. So ever since 2009, I've been paying the same interest rate, which is 8% annual percentage rate with no points. And they love it. They love 8% when the local certificate of deposit of the bank is averaging 0.17. And they love it when the local bank's at 5%. People ask me, they say, Jay, how in the world are you still getting private money at 8% when rates have gone out the ceiling? I said, well, that's a good question. Here's the two answers. Number one, I make the rules, not the lender. When I was borrowing money at the local bank, they made the rules. When you're borrowing money from a hard money lender or broker, they make the rules. They set the rate, frequency of payments. But that's a 180-degree mind shift. We're back to owning the real estate between your ears. Instead of asking for a mortgage, we're offering a mortgage. So anyway, we set the rates. You set the rate.
Mhm,
So how are they protected? Number one, we're not borrowing unsecured money.
mhm,
We could legally, but we sure don't do it. And I don't recommend you do it. That promissory note is collateralized by a mortgage. Here in North Carolina, it's a trust, same thing.
mhm,
So if you don't pay them as the borrower, the property does, which means that's the recourse. That's the recourse that your lender has. In addition to that, we borrow a maximum of 75% of the after repaired value of the property. I did not say 75% of the purchase or the cost.
mhm,
You see, most institutional lenders, they're going to loan you money not based on after repaired value. They're going to loan you money based on cost. Now, there's some exceptions to that. And that's even if you can borrow institutional money now with the way things have tightened up.
right.
So, for example, that little example I gave a few minutes ago of the house that's got $200,000 after repaired value. Notice in that example, I'm borrowing $150,000 to fund that deal. That's 75% of the after repaired value of 200,000.
Mhm,
So I'll buy those houses all day long at 50% of after repaired value. So in that example, I'm bringing home a $50,000 check when I buy because my private lender's wiring $150,000 to the closing agent's trust account, escrow account. We're only using 100 of it for the purchase of the property. That
mhm.
other 50 is going to go towards renovation, carrying costs, etc. My favorite phrase on my real estate attorney's check stub is excess cash to close. And I love me some excess cash. You see, this world of private money essentially is a no down payment structure because we're not taking any of our own money ever to the closing table. We're always bringing home a big check when we buy. And here's a double check. If you can't bring home a check when you buy using private money and paying all cash, you should not do the deal. In other words, you're paying too much for the property
Hmm.
if you can't bring them a check. But back to the private lenders, how are they protected? Conservative loan to value on the after repaired value.
Hmm.
Secondly, in addition to the conservative loan to value, is, as I mentioned, where it's collateralized. Thirdly, we are going to name them as the mortgagee on the insurance policy, the property and casualty insurance policy. If you borrow money from a bank for a house and you get a mortgage, that bank is going to be named as the mortgagee on your insurance policy. Why do they do that? I'll tell you why they do that. Because if you ever put a claim against that insurance policy, the insurance company is going to make the check payable to the lender, the mortgagee, and to you, your entity that owns the property. So that gives them another layer of protection. They got to sign off on that check before you can go cash the check
Hmm.
from the insurance company. We also name our private lenders on the title policy as an additional insured in case there's any title issues down the road. So it's collateralized, it's not unsecured, it's a conservative loan to value, and we give them a 90-day call option. So how are they protected or feel safe? In my program, I give them a 90-day call option in the promissory note, which means for any reason they have an emergency that comes up and they need their money back early prior to the note coming due or prior to me cashing it out. All they got to do is give a 90-day notice. That gives plenty of time to replace their private money with another private lender and cash them out.
Excellent strategies. You're obviously been doing this a lot longer than me, and I've definitely heard of this system and this type of acquiring properties and being an investor in the space. One of the biggest things that I was told early on in my career, which is about 7, 8 years ago, was that your relationships and how people perceive you is the absolute number one it's your biggest resource. And how you live to your word, how you perform in your business, and basically your track record is everything about you. What do you say to someone that is eager to become a real estate investor, that really wants to get going on this and they love the idea of private money? What do you say to someone that wants to start teaching this and doing this, but doesn't have any real estate experience? You don't have that 6, 7 years of, history to say, oh, I've been successful in this. You can trust me. What do you say to that?
I say, don't do what I did, which means don't start out in this business by yourself on an island. You need to lock hips with somebody that knows what they're doing. That could be somebody in your own local REIT or whatever, but you want to joint venture, if you will, or you want to work with someone that knows what they're doing. I
Mhm.
have a lot of real estate investors come to me. Probably 65% of real estate investors that work with me on raising private money are already seasoned. They've already done a handful of deals. The other 35% that work with me on raising private money, they've never done a real estate deal. So that's called leveraging a relationship.
Mhm.
So when I teach real estate investors that work with me on how to raise this private money and they've never done a deal, I say, here's how you're going to leverage the relationship. First of all, you're going to talk about how you and your business partner, Jay Connor, your business partner's rehabbed over 500 houses and been in this business full time since 2003. And I'm going to introduce you to my business partner, Jay Connor, and let Jay explain the program. Learn and earn, right? Let somebody else do the talking for you initially until you've got a couple of deals underneath your belt. You've done the private money, you've done the private lending, et cetera.
Mhm.
So that's a long answer
No.
to the short answer, which is leverage a relationship that's got the credibility.
Yeah. Amen to that.
Now, another answer to that, without leveraging a relationship, is here's what you tell your new private lender. First of all, you got to have the confidence in the program. You got to be able to talk about interest rates, loan to value, et cetera,
Mhm.
which, by the way, are all in my book. I'll talk
Yep.
about that later. But
Mhm.
you got to be confident in the program, conversational about it. And here's the answer. If you're not leveraging a relationship, you simply tell them you're very well protected. If I don't pay you, the property does. and you'll get the property and you'll make more money off the property than you would the interest I'm going to pay you.
Mhm.
But we know they don't want the property. They don't want to mess with the property. If they want the property, they'd be doing what we do. They want to be totally passive, sit back, watch their accounts grow, earn money, etc.
Yeah. So I know that Jay has talked a lot about building these relationships, and very important to our listeners that you may not know where to start building these relationships. And my biggest encouragement to our listeners is to go on Facebook, go on Google somewhere, just look up REIA, a local REIA, local real estate meetup. Me and my business partner host a meetup here in South Atlanta called Dealmaker Atlanta. If you're interested in joining us there, we have a lot of people there that are investors in this space and that are great people for you to get to know. And you could also go and just Google or Facebook local real estate meetups. If you're interested in Dealmaker Atlanta, just head over to onpurposeinvestor.com/dealmaker, and that'll direct you to when our meetings are and where they're located. Jay, you're in the Carolinas. So are you attending local RIAs in your area?
Unfortunately, my area is so small. Our closest RIA is an hour, 45 minutes away.
Yeah.
But, but, but hey, if we had one, I would be there.
Yes, sir. Now, you are also able to expand your network and your resources. And I know you mentioned this briefly that you're in a mastermind. There's all sorts of groups that meet up in different, facets. Has the mastermind that you're a part of been beneficial to your business? And if so, how?
Yes, I'm in 3 masterminds, plus I run my own mastermind. So I'm a member of 3, I run 1, and that right there alone has been the biggest return on my investment of anything that my wife, Carol Joy, and I have been involved in. Surrounding yourself, Jim Rohn gets the credit. You're the average of the 5 people you spend the most time with. Level up your relationships and be intentional about your relationships. Who are you spending time with? And so I love the mastermind groups that I'm a part of. It's all about sowing. It's not about reaping.
Yeah.
It's bringing value to your fellow members. How can you add value to your mastermind groups? Napoleon Hill in Think and Grow Rich, he's got a whole chapter on the mastermind and how it's so important. Relationships. Carol Joy and I have just got beautiful relationships. Some of our closest friends, in addition to church and our church friends, our mastermind friends are the ones that we're absolutely the closest with. And I cannot recommend enough, get involved in a group that you're going to be able to help serve and bring value, and they're going to bring you value as well.
Amen to that. Jay, I appreciate you sharing that with us. Now, before the conversation today, you mentioned that our guests are able to go and get an absolutely free copy of your book, which teaches them everything that we've talked about here on the show today. Can you share with us a little bit about why you wrote the book and what is it going to teach us?
I wrote the book for 2 reasons. Number one, very good friends of mine, and my wife included, have been beating me over the head for years to write my book because it's like the way we do private money really is revolutionary in the fact that we're not asking for money. It's all about leading with a servant's heart and et cetera. And the second reason is, Eric, quite frankly, at 63 years old, I have come to a part of my life that it's more important to me to make an impact and to give back because we've just been so blessed for so many years. For those are the 2 reasons. The name of the book is Where to Get the Money Now. Subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. And this is not an ebook. This is actually a book. Believe it or not, the Postal Service is still in business. We will mail this book out 3-day priority mail to your address. It's $20 on Amazon, but for goodness sakes, don't buy it on Amazon. It's free because you're listening here to Eric's show. Just cover a couple of bucks for shipping and handling. I'll autograph it. I'll rush it right out to you. I'm also going to, with the book, include 2 free tickets to my $3,000 private money conference. I'm going to send those with the book. And the private money conference, I do that 3 times a year. I'm going to include those tickets with the book. And you can get it. You can get the book. You can get the tickets to the event at www.jayconner.com/book. Again, that's Jay Conner with an ER, JAY CONER.com/book, and we'll rush it right out. In addition to that, Eric, my podcast, if you're listening here to Eric's show, come check me out on my podcast on your favorite platform, Spotify, iTunes, etc. The name of my podcast, surprisingly enough, is Raising Private Money with Jay Conner. We got over 600 episodes up there now, and I'm always interviewing people that are raising private money and how they do it. Come follow me at Raising Private Money with Jay Conner podcast.
Jay, I look forward to joining you on the podcast here in August, talk about my little stint at Raising Private Money. But after I get your book in the mail in the next few days, I look forward to possibly showing up to that podcast, having raised even more. So
that's what I'm talking about, Eric. Bring heat, man.
I'm pretty busy with my 3-year-old and 1.5-year-old and helping run my wife's business. She's a CFO and does CFO services for all sorts of companies out there. So helping her in a hand in that and managing my own portfolio. And so maybe, just maybe, I'll have a little spare time to go raise some private capital. But until then, I've submitted my ticket to get that free book, and the 2 tickets, depending on when that is, I can't wait to come. And Jay, it has been an absolute blessing and an honor to have you on the On Purpose Investor podcast today.
Eric, thank you so much for having me. Look forward to having you on my show, Raising Private Money. In the meantime,
God bless you. Thank you. If you love what you heard today, it would mean the world to us if you would take a moment to rate, review, and share this podcast with someone that you believe would benefit too. Sharing is the best way for us to grow and to develop a community to join you on your intentional investing journey.
In the meantime, come hang out with us on social media at On Purpose Investor, or sign up for our next course, newsletter, or meetup at onpurposeinvestor.com. But most importantly, go out, live your life, and do it on purpose.